Our conditions shifting back to bullish in this bull market, seeing futures up slightly this morning, 0.2%, as we have shifted back to majority bullish on the 1 hour as well as the daily time frame here as well. Let's look at SPX. You're seeing this overhead supply block. This is going to be our resistance area that we're dealing with now over the next few days. This 6,100 to 6,200 on S&P 500. If we can clear out above that and get a breakout of price above that, we could see some continuation here in this current move. We're seeing majority bullish now on the 1 hour as well as the daily time frame. Our biggest issue is that longer term chart on the weekly time frame of S&P 500, where we are just really expanded in this current trend from the last bear market that we had a couple of years back. We've now fanned this out. So looking at this chart and the probability of where are we going from here, we've got this expansion that we had back in this move and retraced. We get the compression. These are a decision point. These are a decision point when we're really narrow, when we're really wide. So we're just at the top end of this trend. Doesn't necessarily mean we can't push through this range and continue higher inside of this expanded trend, but the probability of it expanding even further without getting some compression is just starting to weaken at these levels. That is more about position sizing and taking trades in allocating the capital that you have towards this current equity market, what position size you're going to have, number of shares, and so forth. The breadth on the market currently, we're sitting at the 51, just right halfway in between that range. We're at majority bullish on the daily. You can see we're compressing back again. So not extreme one way or the other, which is good. That gives us some space if we do get some bullishness in the market to start to press some of these edges or work towards those extremes. We're not extreme, and typically markets go from non-extreme to extreme. So are we going to go extreme back to the bearish side or the bullish side? That is setting up so far to be looking a little bit more bullish. Obviously, a lot can happen in a day. We'll watch to see if we do get some resistance at this supply block currently. We're seeing VIX pull back a little bit here, majority bearish on the daily time frame. When I say that, I'm just talking about this number right here. If the majority of this trend is meaning, there are 14. So if we're 7 and 7, obviously we have a neutral trend. If we're 8 and 6, then we have a majority bearish. In this case, obviously we're all bearish, and so we're definitely majority bearish. But when we start to shift, this is the number that we're looking at for really the quality of the trend condition. Are we the majority to the upside, the majority to the downside? And obviously, when we get a nice solid number like 14, that is an obvious bullish or bearish scenario. In this case, we're bearish to the downside, which is bullish for stocks, as we see volatility currently at 15, and it can go a lot lower. It can drop back down into this 12 range if stocks continue to rally. We're seeing SHY, the short end of the yield curve, really stuck right here, has yet to give a decent move. We had a gap lower and some price activity. It's trying to decide if it wants to go higher or lower. Ideally, what we would want is we would want bond prices to continue to go higher. That means that interest rates are going lower. So we'll watch to see if this does ultimately move back down or out of this compression zone, or if it starts to move up out of this location that is on SHY. TLT, let's take a look here. This is the long end of the yield curve, meaning the longer bonds, 20 years plus. We're seeing some strength here, some bullishness. And again, that's what we would want to see in that daily time frame. Also some strength there. The yields themselves, the 2-year looking majority bearish on the 1 hour as well, which is what we would want to see and expect to see. Obviously, if bonds are going higher, those yields are going to be moving lower. That's the 2-year. The 10-year also pulling back a little bit. You've got majority bearish at 14 and trending lower. We've got Dow Jones Industrial Average majority bullish. We're seeing some strength there along with the S&P 500. The Dow is also similar price pattern, has some resistance here, all-time highs around that 450 on DIA that we could be testing here today. Same with triple Qs, nice compression of price activity, just this consolidation in the upper end of the trend. We're seeing compression here on the 60-minute, majority bullish on both of those, and also have majority bullish on the Russell. So we're seeing strength really across at least those those four indices that we talk about each morning. Small caps, Russells are the small caps, typically tend to be a little bit more risky, and so when you have a risk-on type trade and you're seeing small caps participate, that can also add into this number right here. That can add into the strength of the trend if we can get more and more participation in that trend, and this number starts to spike higher, and that just gives us a little more confirmation of the strength of this current rally. USO weakening, continue to weaken. We're stuck testing this 50% retracement. We'll see if we get any support right here. You can see that trend is just really no indication of any kind of a bounce, maybe a little bit here recently in the last day or two. We'll see if oil gets any kind of strength. Gold continuing its really nice run, starting to get this expansion of trend towards the top end of that range. The 60-minute, 1 hour time frame expanded in its trend. You can see the upper end of those ranges starting to curl back a little bit. Watch for some kind of compression there on gold, and also SLV getting a nice expansion so far with gold as well. A couple of stocks to consider today. We've got ADTN, nice confirmation bar, big volume coming back in, and pushing towards a breakout of that 11 number. Keep an eye on ADTN. Could see a breakout on that move today. And also I've got Outbrain, which is in the advertising space. Nice confirmation, big volume the last couple of days, moving back up into the momentum zone after a pretty deep counter trend retracement and corrective, and then it just tagged that 618. That's a good solid demand location where you get into this lower supply, this lower demand block of the 50% 618 location. And by then, oftentimes you have sellers dried up. Nobody's left to sell, and you get fresh new demand that starts to come back in these deeper locations of this counter trend box. Okay, this upper range, this is a 236. This is the continuation or momentum zone. And then down below this 382618 block right here is a corrective or counter trend zone. When you have a stock that's had an uptrend, or even a market, whatever you're measuring here, you get this uptrend, retraces back into this area. This becomes demand, ideally exactly what's happening here. Now what we would be looking for is continuation of that move. Now that it's up into that momentum zone, is it going to continue to move from here? That would be the anticipation of a trade on OB. That'll do it for today's update. Everyone have a fantastic day today.